Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, we are focusing on stock-specific news, and Yes Bank shares, they are trading sharply lower after the Bombay High Court on Friday quashed a decision by Yes Bank in March 2020 to write down its additional Tier 1 bonds to zero. Now, of course, Yes Bank will appeal to it, but we do have Lata with us to tell us what exactly it means for the stock and the bank as well. Lata?
Okay, first, what are the developments after the High Court held that no, the administrator was wrong in writing down the bonds to zero? That was quashed. So the developments after that is Yes Bank, which we reported on Friday itself, said it is going to appeal, and we had the MD confirming it today on air. We understand from legal sources that the Reserve Bank may implead and join, but not yet confirmed from the Reserve Bank itself. Now to what was actually said in the verdict. The High Court says that, what was the sequence of events? On March 5th, 2020, the Reserve Bank put out a draft reconstitution of Yes Bank because it had reported very heavy losses. In that document, the Reserve Bank had clearly stated that the AT1 bonds worth 8,500 crores or so would be written down to zero. The final reconstitution report came from the central government on March 13th, and there that clause was omitted. So that was one of the reasons that the court said that the administrator who cancelled the bonds on March 14, the next day, should be bound by the scheme of reconstruction, in which the central government omitted that line. Now, there are other arguments from the Yes Bank team in the court that you don't need the central government's backing for it. The AT1 document itself says that if the bank is in trouble, either we can stop paying interest, or if it is in even bigger trouble, it can be written down to zero. So that is their point of view. Now, all that will have to be presented in the Supreme Court. The Supreme Court can take any position. It can back the High Court's judgment, or it can say, okay, you can write it down, but you have to give something like equity value. You can't write it down below equity. Or they may go the whole hog like the RBI and completely stand by the Reserve Bank and the Yes Bank's decision. What we hear from Yes Bank when they came on the channel is that other things are not affected. There are Advent and Carlyle and others who have invested in Yes Bank just last year, and 75% of the money they gave upfront. The remaining is through warrant conversion, which can happen in 18 months starting March 31. The managing director told us that there is no danger, they will do the conversion. So all these are positives for Yes Bank investors, but ultimately the court order is an overhang. I guess Yes Bank and RBI will ask for a stay first when they go to the Supreme Court.
All right, Lata, thank you so much for that. With that, we'll step into a short break. As we do that, here's a quick programming update for our viewers. CNBC-TV18 has compiled a list of the top 20 stocks to watch for in 2023. It's been a carefully curated list of companies that warrant a closer look in 2023 based on factors like growth prospects, new launches, management changes, reforms, etc. As a disclaimer, of course, this is definitely not a recommendation list, but a list of companies which have meaningful triggers lined up this year. Tune in to CNBC-TV18 tomorrow at 10 a.m. We'll get you a sneak peek